Hello students, welcome back to my YouTube channel RAW. Today we are going to discuss some of the most important problems, numerical problems under the topic of goodwill. The topic goodwill deals with two different types of problems, whereas problems with adjustments and problems without adjustments. In my previous video, we have discussed what are the different types of adjustments and what is the corrective action or the accounting treatment with respect to those adjustments, such as abnormal loss, abnormal gain, overvaluation of opening stock, or undervaluation of closing stock, or overvaluation of closing stock, or undervaluation of opening stock, any amount of future expenses or the management cost, and also the amount of depreciation. So all these were some of the adjustments which we have discussed in the previous video. The link of those video is been given in the comment box. Now in today's session we are going to discuss some of the most important problems with adjustment first. Then we'll also have some of the hard questions or the tricky questions which we can expect in our board examination. Right, let's start the problems. First, let's see the problem number 6 in our textbook. The problem says Om, Shanti, and Namo. There are three partners by name Om, Shanti, and Namo who are sharing their profits and losses in equal ratio. They have trying to admit a person called Dave for equal share. And for this purpose, they are going to validate the goodwill of the firm for the 4 years purchases using the last 5 years profits. So they have been given with 5 years of profits. Using the 5 years profit, you're going to derive the average and then you're going to work out the goodwill with the help of 4 years of purchase. Now, the profit or loss for each of the given years are, so 31st of March 2019, we have got a profit of rupees 30,000. In the year 20, we have got a profit of rupees 70,000. In the year 21, there was a profit of rupees 1 lakh. In the year 22, there is a profit of rupees 1 lakh 40. And towards the end 2023, there is a loss of rupees 1 lakh 20. It was given very clearly in the additional information that on 1st of April 2022, 5 cycles costing rupees 20,000 were purchased and it has been wrongly debited to traveling expenses. So, purchase of a cycle, right? So, cycle is an asset. An asset has been purchased. Purchase of an asset should be treated as a capital expenditure, but it has been wrongly assumed as traveling expense, which is a revenue expenditure. So, by treating a capital expenditure as a revenue expenditure, what will be the impact is it will reduce that particular year's profit in general. Okay, if at all you are supposed to get a profit in that particular year, the profit would have got reduced by the value of this cycle which has been purchased. And if at all it is a loss you have incurred during the year, then this particular amount of cycle which has been treated as a traveling expense would have increased our loss. So we have to take the corrective action. Either if there is a profit or loss, we need to do the corrections. Let's see what sort of correction to be taken up. Now, depreciation is being mentioned here. Obviously, cycle is a fixed asset, so fixed assets will undergo depreciation, and it is mentioned that the depreciation on the cycle is to be charged at the rate of 25% per annum. So, calculate the value of the goodwill is the question. Right. Let us try to do the working notes. Now, which particular year this error has happened? If you see, it was mentioned that on 1 4 22. Okay, it was during the year 1 4 22. You have purchased cycle. Okay, and how many cycles you have purchased? You have purchased 5 cycles. For what value? For rupees 20,000. Remember, it is not mentioned like 5 cycles were purchased for rupees 20,000 each. It has been mentioned that 5 cycles put together is 20,000. So the overall cost of 5 cycles is 20,000. And how you are treated this? This has been treated as a traveling expenses. This is wrongly treated as traveling expenses. And if it is purchased on 1 4 22, then when that particular year will come to an end, this will come to an end on 31st of March 2023. So now the entire focus should be on the year 2023. Okay, now see what is given for 31st of March 2023. In the year 31st of March 2023, there has been a loss of rupees 1 lakh 20,000. Right? There is a loss of rupees 1 lakh 20,000. Now, the treatment for considering a capital expenditure as a revenue expenditure. Okay, this treatment, what has happened is you are wrongly treated a capital expenditure as a revenue expenditure. Okay, so capital expenses wrongly treated as revenue, right? A capital expenditure wrongly treated as revenue. Now comes the concept. It should be added. So I have got a loss of rupees 1 lakh 20. With this, if I'm going to add an amount of rupees 20,000, positive value and the negative value, so the amount will be rupees 1 lakh on the whole, but with a negative symbol, which means still I am getting a loss only, but the loss is not 1 lakh 20. Now the loss has come to 1 lakh. Okay, but the problem doesn't stop just with this. The calculation of depreciation is also to be worked out. It has been mentioned very clearly that it was wrongly debited to traveling expense. Depreciation on cycle was to be charged. That means still it is not being charged. It is yet to be charged. So you have to do the calculation of depreciation. Okay. So depreciation is given at the rate of 25 percentage. It should be calculated on the value of fixed asset. That means on the value of rupees 20,000. Okay. Date of purchase of the cycle is already given. Okay, this is the date of purchase, right? This is your date on which you have purchased the cycle. Because for calculation of depreciation, the date of purchase is also very important. Only then we'll know whether it should be calculated for the full year or 9 months or 6 months, as the case may be. So here it is for the full year. So just apply 25 percentage on the value of rupees 2 lakhs. So when we apply the value, okay, 20,000 and charge 25 percentage on it, we'll be getting an amount of rupees 5,000. Now this 5,000 is nothing but this is your amount of depreciation. Now remember, any future expenses which has to be charged or which has to be considered should be subtracted. So that means this value of 5,000 I have to deduct. Okay, from which value? From that particular year's profit or the loss value. So as of now, I have got rupees 1 lakh. With this, I am going to subtract an amount of rupees 5,000. Now, minus 1 lakh, because it's a negative loss value, minus 1 lakh and minus 5,000 will give me an amount of rupees 1 lakh 5,000. So now I have derived what is my actual profit for the year 2023. However, in the year 2023, it is not profit. So this is my actual loss. This is my original loss or actual loss or normal loss. Now I should find out the average. So for finding out the average, let me record all the 5 years starting from 2019 onwards. Okay, so now let me find out average profit. I'm going to find out my average profit. So starting from the year 2019, 20, 21, 22, and 23. Write a heading here as years. Followed by that here profit or loss. Okay, profit or loss. So the value of the profit or loss of each of these here, it is mentioned as 30, 70, 1 lakh. Okay, profit or loss amount in terms of rupees. 30,000, 70,000, 1 lakh rupees, then 1 lakh 40, 1 lakh 40, and finally there is a loss in the year 2023 which is an amount of rupees 1 lakh 5,000. Now add these values and finally subtract 1 lakh 5,000, which will give you the actual, okay, that is the total profit for these 5 years. So 30,000 plus 70,000 is 1 lakh, 1 lakh plus 1 lakh is 2 lakh, 2 lakh plus 1 lakh is 3 lakh 40, 3 lakh 40 minus 1 lakh 5,000. Find out what is 3 lakh 40 minus 1 lakh 5,000 and quickly tell me the value. Students, make it fast. Okay, 3 lakh 40, okay, minus an amount of rupees 1 lakh 5,000. How much you're getting? You will be getting an amount of rupees 2 lakh 35,000. Positive figure. 2 lakh 35. What is this 2 lakh 35? This 2 lakh 35 is nothing but your total profits. It is your total profit. Now apply the formula. Average profit is equal to total profit divided by number of years. Thereby 2 lakh 35,000 when you divide it by 5, because we have taken 5 years. Am I right? So since 5 years has been taken into account for the calculation, check out what value you'll get. If this has been divided by 5, how much you're getting? Rupees 47,000. Very good. Now I got my average profit. Now substitute for goodwill. So goodwill formula. Goodwill is equal to your average profit into number of years. In the question it was given as purchases. Okay, so that means average profit just now I got rupees 47,000 into number of years purchases, it was given as 4 years. Once again you can verify the question. It was given as 4 years only, right? There is no doubt about it. So thereby 47,000 into 4, how much you are getting it value? You will be getting an amount of rupees 1 lakh 88,000. This is your answer, goodwill value. Check, are you getting 1 lakh 88,000 as your profit? That is your goodwill. Yes. So it is given very clearly rupees 1 lakh 88,000. Okay. Next, let's move on to problem number 7. We are quickly going to work out most important problems and where there are something to be focused. So in problem 7, it is mentioned like there are two partners, namely Love and Kush, who are sharing the profits equally. And they are admitting a person called as Shub into the partnership for equal share itself. Okay. Goodwill was agreed to be valued. Okay, so how you are going to value the goodwill if you see at 2 years purchase of average profits of last 4 years. So same way, you have been given last 4 years profits or loss details. With that, you are going to derive your average profit, and that should be multiplied with the number of years purchase, which is 2 years purchases. The last 4 years profits and losses were. So starting from the year 2020, so 20, 21, 22, and 23. It is given like the normal profit was 70,000 and profit value. Then it goes to 1 lakh rupees in the year 21. In the year 22, it is 55,000 rupees loss. Look here. Sometimes in the problem, the loss will be expressed with a bracket symbol. Whereas in some problem, the same loss will be expressed in a positive value, but near to it, it will be mentioned as loss. So either way, they can mention it. But please be very cautious when you are dealing with losses. And then finally, for the year 2023, there is a profit of rupees 1 lakh 44. Now they are given you some information of additional points or additional information adjustments. The books of accounts of the firm were presumed, and the following things have been noticed. Number one, the firm had profit on sale of building. So they are talking about there has been a profit on sale of building, which is nothing but an abnormal gain. So you should remember what is the treatment of abnormal gain. We have something called as abnormal gain in the problem. So abnormal gain should not be treated as your business profit. It should be directed. So you have to minus, subtract. Okay. So on which particular year, if you say during the year ended 31st March 2020. So abnormal gain has happened in the year 2020's profit. So what was 2020 profit? 70,000 rupees is the profit. So that means from rupees 70,000, you have to deduct an amount of rupees 10,000, which is nothing but an abnormal gain. So this will give me an amount of rupees 60,000. Able to understand? Right. The followed by that, the second adjustment says very clearly, firm incurred loss on sale of computers. So that means what this is an abnormal loss. Okay, don't expect that they will give you with the bracket whether it is abnormal profit or abnormal loss in all the cases. Some questions they may give you directly that it is an abnormal loss or abnormal profit, but most of the cases they will just give you the information alone what has happened. We have to understand whether it's an abnormal profit or abnormal loss and then do the necessary corrections. So here it is nothing but an abnormal loss. So the value of abnormal loss was rupees 2 lakhs, and during the year ended 2021 this has happened. So now let us go for the treatment of abnormal loss, right? Abnormal loss. So an abnormal loss is basically not a business loss, whereas we have treated this as a business loss and thereby we have reduced the profit for that particular year. So it needs to be added back. So abnormal loss, the accounting treated is add back the money. So what is the year, which year it has happened? In the year 2021. Okay. So for the year 2021, check what is the amount of profit. It was rupees 1 lakh. With this, add the amount what is mentioned. It was mentioned as 20,000 rupees. So thereby the amount actual profit after the adjustment comes to rupees 1 lakh 20, right? So then with the first adjustment, this is the first adjustment. Okay, and this is the second adjustment. All this can be mentioned under the head as working notes. Okay, now comes the third one. What is mentioned for third one? If you see repairs, it talks about the repairs. So repair to car rupees 50,000 was wrongly debited to vehicles account. So look here, it's quite a reverse effect I can say. In the previous problem, we have seen that we purchased a cycle. Five cycles have been purchased, which is nothing but purchase of cycles a capital expenditure, but we have treated that wrongly as a revenue expenditure. But here it's quite reversed. The situation itself has reversed. We have actually incurred a repair to a car to the worth of rupees 50,000. But what has happened is this value, what you spent on repairs, was wrongly treated as purchase of car. I'm making sense to you. What has happened is, okay, so you have purchased a car. No, you're not purchased a car. You have actually spent 50,000 on the repair for the car. Okay, but it was wrongly assumed or treated as purchase of car. So what has happened? You have treated a revenue expense as a capital expense, right? So here it's quite different. Okay, a revenue expense has been treated as capital expense. On what date it has happened, that is very important. Okay, on 1st June 2021. Okay, just read the sentence. Repairs to car of rupees 50,000 was wrongly debited to vehicles account on 1st June 2021. So this is that particular date on which we spend the amount of 50,000 for car repair, but we had taken this wrongly as vehicle account, moved to vehicles account. And followed by that we say depreciation was charged on vehicle. Look at the difference between the adjustment what we saw in the earlier past and the adjustment what we are seeing the current. Once again, I'm just taking you back to the previous problem. Here, it was actually vehicle has been purchased, but you are treated wrongly as though it is a traveling expense. So that correction you are done first. Then it was mentioned very clearly depreciation on cycle was to be charged. That means all the fixed assets are subject to depreciation, and it is said very clearly depreciation on the cycle was to be charged, which means as of now it is not charged. Now you charge it, you calculate. So obviously it is a future expenses which has to be reduced from that particular year's profits or losses. So you are done the necessary adjustments and you're done the treatment and working according to that. But here they're not used the word was to be charged. Look at the sentence how they changed here. Depreciation was charged on vehicles at the rate of 12 percentage per annum. So you have okay wrongly considered a revenue expense as a capital expense. That is the first mistake. And not only that, you're not stopped with that mistake at all. Further, you have committed one more blunder. That means you have calculated 12% depreciation on the value and then you have reduced it from that particular year's profit or the loss since you have applied the accounting treatment of depreciation. And how this has been done? It has been done on straight line method. Okay, so this is the most important adjustment for the day. Okay, when you have purchased it, you have to see. Okay, the third adjustment is with respect to depreciation and also treated a revenue expense as a capital expense. Okay, so which particular year is mentioned? It was happened in 1st June 2021. That means it is the period from 21 to 22, right? First you should understand what is the accounting period. So that means it ends by 31 3 22. This is the accounting period, but though the starting date is not 1 6, it is on 1 4. So basically it falls under the financial year or the accounting period, okay, from 1 4 21 to 31 3 22. This is the full accounting year in which on 1 6 only you have spent for repairs. What was the amount that you have spent on repairs? It was 50,000, right? An amount of rupees 50,000 has been spent on repairs. But what has happened? You have not taken this 50,000 as an expense, but you wrongly treated this as a vehicle which has been purchased. Please, if you don't understand, let me know, because this adjustment is very important. You have to understand first, only then you will be able to work it out. Without understanding, please don't think that you can able to do it off. Okay, because these are very important problems, right? So now, what is the data that is falling under the year 31 3 22? Okay, so during that particular year, check it out whether are we got a profit or have we got a loss first. We would have got a loss of rupees 50,000, correct? Okay. Now, what you should do, you should calculate depreciation also. At the same time, you should also ensure what is the amount of repairs that has taken place. So, repair expenses you should have debited to which account? P&L account. But what has happened? You have treated this as a capital expenditure. So that means your loss will be increased or it will be decreased because of this. You have treated wrongly your repair charges as a purchase of vehicle. Now because of this, the profit or the loss for that particular year would have got increased or it would have got decreased initially. It would have got, it would have got, yes, it would have got, okay, decreased first. But now we need to increase that particular year's loss. Okay. Second, depreciation will decrease your profit or it will increase your profit. It will decrease the profit. But this should be added off, right? This has to be added back. And remember, this particular adjustment doesn't stop with one particular year. There is another year followed by the year of 22. That is, because there is also 23. So obviously the same impact will also occur on the year 23. Correct? So now what you should do? You have to find out what was the amount of the depreciation, and that depreciation should be deducted or it should be added back. Yes, it should be added back. Good. Okay, so now calculate what needs to be done. Okay, so during that particular year, which year 2022, the loss, actual loss was 55,000. Am I right? The actual loss was rupees 55,000. Okay, so record that value. Okay, the amount spent on repair was 50,000. Okay. And what has happened? You have calculated depreciation on that particular value at the rate of 12 percentage, right? And for how many year months? It has done for 10 months initially, right? How's that? From June to March. Okay. From June to March, you can see that it is totally how many months? 10 months. So calculate the depreciation for this particular value, 50,000 into 12 by 100 into 10 by 12. When you calculate this, how much you get depreciation? You will get an amount of rupees 5,000. Okay. Similarly, okay, calculate once again on that particular value, 50,000 is a value, calculate 12 percentage on that. So eliminate the common two zeros, 12 fives are will give you 60 and then add two more zeros. Now why this has happened is because we have got the year 22, okay, this is depreciation, okay, depreciation value for the year ended 2022. and this is the depreciation because you have they said very clearly you are charged depreciation. So when you have charged depreciation, obviously you have done it from the year when it was purchased and as on date up to the current year you would have done depreciation calculation. So that is the reason I am calculating for 2 years, and this is a depreciation for the year 23. So now I should have to take the corrective action. So the original loss, okay, which is given the question during the year 2022, I have 55,000 rupees as loss. Correct? How much is a loss? I have 55,000 as a loss. Okay. Now, how much is the actual value? How much is will be actual value? Yes. Okay, the actual value of the loss will now be rupees 1 lakh. Okay, the actual value of the loss will now be rupees 1 lakh. You may now ask me how come. Okay, what was the amount of your amount loss? The repairs, the repair charge was rupees 50,000, right? Okay, now tell me 50,000 you have spent on repairs, right? You are spent on repairs. We had an adjustment statement. This is the only adjustment which you have to just think about it. A lateral thinking, I'll say 50,000 you are spent on repairs, but it was treated as what? Purchase of car. It was treated as purchase of car. So that means revenue, okay, it is a revenue expenses wrongly treated as capital expenses. This is what happened. We don't have such type of category in the adjustment table. We have the reversal of this. What is that? Capital expenditure treated as revenue expenditure. What will you do if your capital expense is treated as revenue expenditure? You'll add back. But now what has been said? It is a revenue expenditure which has been wrongly treated as capital expenditure. If this is a case, nothing to be done, it should be minus. It should be subtracted. Just think different. When you have a capital expenditure treated wrongly as a revenue means, okay, you are just adding that particular value with that particular year's profit or loss. In the same way, when it is a revenue expenditure which has been wrongly treated as a capital expenditure, you have to direct it. So thereby, I have minus 50,000. Now see how I'm getting the value. I have minus 50,000. That means I have to direct 50,000. Okay. And then I have got an amount of rupees 5,000 which is depreciation to be added back. Okay, so 5,000 of depreciation, okay, in the first year. So minus 50,000 and plus 5,000 will give me an amount of rupees 45,000. Now this is a negative symbol, right? Yes. And then again an amount of rupees 6,000 which should be done in which year's profit? In the second year's profit. Okay, this is up to the action which you will have to take it in the year 2022. Okay, in the year 2022, you have to finally direct this value from that particular year's loss. So that means actual loss for the year 22 was given in the question as 55,000, right? So 55,000 is the amount of negative symbol, and you have to finally subtract the value of rupees 45,000. Both are in negative, so that gives you an amount of rupees 1 lakh, which is a negative. And over here, for the second year 2023, okay, in the year 2023, there is a profit of rupees how much? 1 lakh and 44,000, right? Actual profit was given as 1 lakh 44,000. And with this, What is the amount that you got? The 6,000 rupees, right? Depreciation. That should be added back. So rupees 6,000, you add with this, you get an amount of rupees 1,50,000. I'm making sense to you how you got these values? Because this is the only problem where many students will not understand why we are adding that 6,000 and how we got this 45,000. Okay, and then why we are minusing the amount of 50,000, all such things. So the reason is quite simple. It is nothing but you're treated a repair charges as a purchase of a car. That means revenue expenses is wrongly treated as a capital expense. So you should subtract the amount. So all are subtract. Okay, so 55,000 is that particular year's loss minus 55,000, with that minus 5,000, and then you have to add back the 5,000 of depreciation, because actually depreciation should have not been charged. Okay, I mentioned here the reason. Okay, why you add this depreciation. Okay, depreciation. Okay, depreciation of rupees 5,000. Okay, was to be added back. Okay, it should be added back with that year's profit or loss, since we have not purchased any fixed assets. Okay, since we have not purchased any fixed assets, we have wrongly calculated depreciation. Because of that depreciation, our profit or the loss, okay, has some impact. Profit would have come down and loss would have got increased. So in order to make them come to its old value, I need to take this corrective action. Okay, please remember why I am just adding this 5,000. Okay, for the year 2022 is what mentioned here. The same will be for 2023. Hope I'm making it clear to you. Yes, please reply your comment in the comment section whether you are understanding the concept or not. Without understanding, please don't proceed with the problem. Okay, you'll get held up somewhere else, right? And we are taking these much efforts for your understanding. And please share, subscribe, and give a like to the video if you really like it. Right. So now I've got the exact value of profits and losses for all the given 4 years. So let me write the years over here. It is profit or the loss with the amount of rupees symbol. Right. Okay. So now let me write here starting from 2020, 20, 21, 22, 23. What is the value of profit for the year 20? It was 60,000 rupees. We already got it in our first adjustment. Yes, in the year 21, it is mentioned as rupees 1,20,000. Right? In the year 20, 1,20,000. And in the year 22, it is a loss of rupees 1 lakh. As I already mentioned the workings over here, right? For the year 22, here you got the calculations. Okay, the calculation is 45,000 you got to be minus from this particular value, so that leads to rupees 1 lakh. And over there, finally you're getting an amount of rupees 1,50,000 for the year 23. Now add back 60,000 plus 1,20,000 plus 1,50,000 and finally subtract 1 lakh from that. So 1,20,000 plus 60 will give you an amount of rupees 1,80,000. 1,80,000 plus how much? 1,80,000. Okay, plus an amount of rupees 50,000. How much you'll get? 1,80,000. Okay, plus 1,50,000. will give you an amount of rupees 3 lakh 30, and 3 lakh 30 minus 1 lakh, you will get an amount of rupees 2 lakh 30. Are you all getting 2 lakh 30? Okay. This 2 lakh 30 is nothing but your total profit, right? This is your total profit. Now find out the average profit for this, okay, calculation. So it is 4 years, right? So write down average profit is equal to total profit divided by the number of years. I'm sorry. Okay, number of years. So thereby rupees 2 lakh 30,000 divided by 4. Thereby I'll getting my average profit of rupees how much? 57,500. Now goodwill needs to be calculated. So what they have said in the question very clearly, goodwill is to be calculated on how many years purchase? 2 years purchase. Correct? So goodwill is equal to your average profit into number of years purchases. Number of years purchases. So according to that, rupees 57,500 is your average profit into number of years purchase is going to be as 2 years. So this will give you an amount of rupees 1 lakh 15,000. Am I right? We have been given very clearly the question that it is 2 years purchases. Isn't it? Yes, 2 years purchases. So any doubt up to this 21? Good. So we are done with two important problems. Now moving on to the next important problem whereby it is respect to closing stock. This particular problem is with respect to the closing stock, right? Let's quickly complete the problem. Come to sum number 12. What is mentioned in sum number 12? It is given that average profit, okay, average profit earned by the firm was rupees 75,000. So first information what we have in the question is we have the data of average profit which is given as rupees 75,000, and it is given very clearly which includes, okay, so this average profit is including, it includes undervaluation of stock which is amount of rupees 5,000. On what basis? On average basis. So we have learned one adjustment. What is that adjustment? If you see, undervaluation, okay, so we can either undervalue the opening stock or the closing stock, okay, so which means it has been done on an average basis, they say, right? So undervaluation of stock, this is the adjustment given here, but we do have two more, okay, things to be understood. What is it? If you see, undervaluation of opening stock, this is one adjustment which we have learned, and the other one was undervaluation of closing stock. What used to be the accounting treatment for this? If suppose you have undervalued the opening stock, then it should be subtracted, it should be minus. Whereas undervaluation of closing stock means it should be added. So if at all it is given in general or in specific that it is an opening stock which has been undervalued or it is a closing stock that has been undervalued, we know what is the accounting treatment is all about. We have to either add or we have to subtract. But here it is mentioned only as undervaluation of stock, okay, on average basis. So this is the speciality. We are mentioned only as stock. We are not given a clarity whether it's opening stock or closing stock. But we are given an information that the stock is being undervalued on average basis. Just think about this logic. What is it logic is? The closing stock, okay, the closing stock of the current year, okay, or this year, whatever it is, the closing stock of current year, okay, will be the opening stock. Okay, this will be the opening stock for next year. Now you see, in this, are you getting closing stock? Okay, are you also including your opening stock? Then what is the average opening plus closing, right? Both, if you club it, it becomes average. So here they are trying to inform you that, okay, on average basis, the closing stock is what getting undervalued. So undervaluation of closing stock, what is the accounting treatment? It should be added, right? So this is the exact concept which is hidden inside this particular adjustment, because they are neither mention opening or closing, but they are given a clue or hint in the question itself that it is done on an average basis. So when I say average basis, it includes both the stock opening and closing. Okay, because average stock is nothing but opening stock plus closing stock divided by 2 is called average stock. And here, that opening and closing, the connectivity between these two, okay, and undervaluation, we have to link it in such a way that it is a closing stock of current year which is got undervalued. So the impact of current year will also get followed through to the next year, and thereby we need to do it as addition. The adjustment is we need to add back. So look here, the amount of average profit was rupees 75,000, okay, given in the question. So I have taken that, okay. And what was the valuation amount? It was 5,000 to be added back, okay, undervalued stock, thereby it gives me 80,000. Am I making sense to you? So thereby my valuation of stock average profit was rupees 75,000. Okay, with this I am going to add undervaluation. Okay, undervaluation of stock rupees 5,000. So altogether my amount of profit will be rupees 80,000. So this is my actual average profit. Now, what is again mentioned in the question further? It was said very clear that capital invested in the business was rupees 7 lakhs. So, capital invested is nothing but the amount of capital employed. Okay, so capital invested. Okay, remember these are the words which can, okay, refer to capital employed. Capital invested, or okay, they can also mention as net assets. Okay, these both are referring to one common area, or it is referring to one common concept, that is nothing but your value of capital employed. So the value of capital employed given in the question is rupees 7 lakhs. Right? Okay. Followed by that, what is it? And normal rate of return 7 percentage. So along with this, they are also given you that NRR. Okay. So NRR is also given to you, which is mentioned in the question as 7 percentage. Look here. This is again a peculiar problem, I say. Usually, we have seen in the earlier past that NRR will be either, okay, 5 percentage or 10 percentage or 15 percentage or 20 percentage as the case may be. That means all this would have been multiples of 5s. Okay, so far whatever we have seen, okay, we had multiples of 5 as a NRR. But please don't have a misunderstanding that NRR means always to be like a round figure 5, 10, 15, 20, like either multiples of 5 or multiples of 10. Not the cases. NRR can be of any value. So here it is given as 7 percentage, right? And what I asked you to calculate it. They have said very clearly in the question, okay, what is they said? Goodwill, okay, calculate the goodwill value of the firm on the basis of how many times? Okay, goodwill is to be calculated. Calculate goodwill of the firm, okay, on the basis of 5 times super profit. So usually, okay, as I said in my previous video also, basically goodwill will be calculated in such a way that in what method they are asking to calculate that particular value into number of years purchase most of the case. But if they are given times, then it should be multiplied with times. So here on what basis they said it is on the basis of super profit. So thereby I understood the concept completely that it's a super profit method, right? It is a method of super profit. So what is super profit? It is nothing but your average profit value minus your normal profit value, right? Your average profit minus normal profit. Okay, we know what is the average profit for this particular problem. It is 80,000 after considering that closing stock. Minus normal profit. There is no normal profit given directly, but we have given the capital employed. Okay, and you know that the formula that normal profit to calculate the value of your normal profit. Okay, the formula is capital employed into NRR by 100. Apply that formula. Capital employed into NRR by 100. So when I'm going to substitute that 7 lakh rupees into NRR is 7 by 100, cancel the two zeros. Now 7 sevens are get 49 followed by that 1, 2, 3 zeros. So what was your amount of normal profit? The normal profit value is given as rupees 49,000. Okay. Now find out what is the difference between these two. 80,000 rupees minus the value of rupees 49,000. You will get an amount of rupees 31,000. Are you getting this value? 31,000. Are you all getting it up? Yes, we have also got here 31,000. So what is this value? It's a super profit. Now goodwill is said very clearly you should have that 5 times, right? So write that particular formula. Okay. So you got your super profit. Now you apply the goodwill formula. So goodwill is equal to super profit into 5 because number of times is 5. So that means rupees 31,000 into 5. So how much it will give? An amount of rupees 1,55,000. Correct? So goodwill is rupees 1,55,000. Hope you understood this problem. I don't think there is any difficulty in this problem. Correct? So sum number 12. One thing what is peculiar here is you have been given the stock which is got undervalued on average basis. So whenever it is mentioned as the stock has got undervalued by average basis or stock has been overvalued by the average basis, it is nothing but the closing stock only they are trying to indicate it the diplomatic way. So you have to take the corrective action what you have to do for closing stock. In the same way, look at the sum number 12. Yeah, sorry, 13. In sum number 13, it is mentioned that average profit is earned during the year is rupees 2 lakh 50,000. Okay. And it includes overvaluation of stock. Okay, rupees 10,000 on average basis. So now again, stock has got overvalued on average basis, closing stock. So overvaluation of closing stock should be subtracted from the value of rupees 2 lakh 50,000. So from 2 lakh 50, I am subtracting this 10,000, that gives me 2 lakh 40. This is my average profit. And the rest of the things are same like a previous problem. Capital invested is given as rupees 14 lakhs. It is nothing but the capital employed, and the normal rate of return given here is 15 percentage. So when I apply this 15 percentage on the amount of 14 lakhs, I'll be getting my normal profit. So let me calculate what is my normal profit for this particular problem is. So the amount is 14 lakhs, right? So I'm going to derive my normal profit. Normal profit is your capital employed. Write the formula and then do it. Okay, capital employed into NRR by 100. So 14 lakhs into, it was given very clear, 15 percentage. Okay, it's 15 by 100. So what will be the value? Calculate until 14 lakhs into 15 divided by 100. You will get an amount of rupees 2 lakh 10,000. Am I correct? So this is your normal profit, 2 lakh 10,000. Check out what is given as your average profit. It was earlier 2 lakh 50. In that subtracted 10,000, so 2 lakh 40, right? So 2 lakh 40 is your average profit. So write that super profit formula. Super profit is equal to your average profit minus normal profit. So average profit, you know, it is 2 lakh 40, which you got it rupees, minus the normal profit you got here as rupees 2 lakh 10. So that means how much is the value? This leads to rupees 30,000. Now, how they ask you to calculate goodwill of the firm? The goodwill of the firm is to be calculated on what basis? Capital invested is given. Okay, calculate the goodwill of the firm. Okay, on the base of 4 times of super profit. So it should be multiplied by 4. So 30 into 4. Okay, that's the only thing that do it. Okay, so goodwill is equal to, write the formula and then proceed. Okay, goodwill is equal to your super profit into number of times. What is the times they are given in the question? 4, I think so. No, it was given as, yeah, 4. Okay, into 4. So that means rupees 30,000 into 4. That gives me rupees 1 lakh 20 as my goodwill. Check it out, check it out. Correct? Yes. We are getting an amount of rupees 1 lakh 20 as our profit. Goodwill. Any doubt in these problems? Please make sure that these problems are very essential, and these problems will make you to understand the problem even more wider. Okay, this helps you to, okay, think the problem even more better, and that gives you a better clarity too, right? We have still have, okay, 2 or 3 more problems under this category. So we have sum number 15, then 16, and sorry, 18 and 19. Okay, so 15, 18, 19. This ensures we complete the problem, right? So quickly we come to sum number 15. What is mentioned in sum number 15? Let's quickly understand. So Miss High Tech India, a company, okay, firm, had assets of rupees 5 lakhs, whereas liabilities are the partner's capital 3 lakh 50, general reserve 60,000, Sundry creditors 90,000. If normal rate of return is 10% NRR and goodwill of the firm was valued at rupees 90,000 at 2 years of purchases of super profit, find out your average profit. So it is average profit to be found out. Now, what is the thing given the question? Okay, the things given here are assets of the firm is given to us. Okay, so let me take this all as working notes. Okay, so assets of the firm. How much is the value of assets of the firm? Rupees 5 lakhs. Okay, then the liabilities. Okay, whereas liabilities are partners capital, sundry creditors, general reserve, all these information. Okay, so let me take over those over here. Okay, liabilities. So liabilities of the firm. What are the item that comprises the liability? You see, capital is there, reserve is also there, and then it is also mentioned that you have got what is sundry creditors. Okay, you got sundry creditors. Okay, what is the value of each of these? Partners capital 3 lakh 50. Okay, so rupees 3 lakh 50 plus what is the value of the reserves? 60,000. What is the value of your sundry creditors? Rupees 90,000. Now tell me how much you get as a total liability. 3 lakh, okay, 50,000 plus 60,000 plus an amount of rupees 90,000. You are getting 5 lakhs exactly. Correct? Okay. We know that there is a concept of capital employed to be derived if it is not given, either use asset side approach or liability side approach. Correct? Okay, so let's see whether capital employed is given the question or not. It was given very clearly that NRR is given as 10 percentage. Okay, so NRR, okay, which is essential to calculate our normal profit with the help of capital employed. And goodwill of the firm is also given as 90,000. So they are given as goodwill value. Okay, goodwill as given as rupees 90,000, and they said very clearly it is a super profit method and 2 years purchases. So method they are given as super profit method. Okay, what method they have used is super profit. Okay, and the purchases. Okay, number of years purchase, it was 2 years. Number of years purchase is given as 2 years. Okay, now let's calculate using the super profit method. Write the formula. Super profit is equal to your average profit minus your normal profit. Am I right? This is your formula. Okay. Now, in the question, they have asked us to calculate what finally? They're asking us to calculate, find out the average profit. So, question is to find average profit. Okay. So, average profit to be found out. So, that let's take it as X, the value as X itself. So, super profit is equal to, I don't know average profit that is to be found out, X minus normal profit. For finding normal profit, I don't have capital employed directly, but I have got something asset information and liability information. So this problem I can work out either by asset side approach or by liability side approach. I'll get the same capital employed. Let me work out and show you in two way. Whichever is feasible for you, use that. Okay. Using so capital employed calculation. Okay, I'm going to do the capital employed calculation. First, let me use asset side approach. Okay, using asset side approach. What is the formula? Write the formula. Total assets except goodwill. Okay, except your goodwill, non-trade investments, and then the value of your fictitious assets. Value of your fictitious assets minus outside liability. Minus outside liability. So according to that, here if you see, okay, my total assets value given as 5 lakhs, but nothing is mentioned what this 5 lakh includes. So I can take that 5 lakhs as 5 lakhs itself. So rupees 5 lakhs minus outside liability. In the liabilities category, the only item which is an outside liability is my sundry creditors, because capital is an internal liability and reserves also a liability which is created from the earned profits. So these things will not come as an outside liability. So only sundry creditors 90,000 will be considered as my outside liability. So an amount of rupees 5 lakhs minus an amount of rupees 90,000 will be the value of my what? Yes, the value of my capital employed. So here it is rupees 4 lakh 10,000. Right, let me see whether even by using the liability side approach, will I be getting the same value? Okay, so liability side approach. Okay, using liability side approach. What is the formula? The formula is quite simple. The value of capital plus the value of reserves minus the entire set like this. Okay, goodwill, if any, okay, non-trade investment and fictitious asset. Okay, so this is to be copied here. Okay, so thereby the value capital plus reserves minus goodwill and non-trade investments and the value of my fictitious assets. But in this case I don't have any fictitious assets or non-trade investments or goodwill, so I have only capital and the reserve. The value of capital is 3 lakh 50 and reserve is 60,000. Add these two, right? So 3 lakh 50 plus reserve of rupees 60. This will give me the total of rupees how much? 4 lakh 10,000. Now check it up. By using asset side approach also I'm getting 4 lakh 10 only. By using my liability side approach also I'll get 4 lakh 10. So there are some problems where, as I said in my previous video, you will have to use any one out of the two methods. By using that you will get the same amount only. So now I got my capital employed and I have my NRR. Just find out my normal profit, okay, which I need to be found out. Okay, so normal profit, right? I'm going to find out my normal profit. So normal profit is equal to capital employed. Okay, capital employed into NRR by 100. So according to that, in this case it is 4 lakh 10,000 into 10 by 100. Just cancelling the common zeros, I'll be left over with an amount of rupees 41,000. So I've got the value of my normal profit rupees 41,000. Okay. But I don't know the value of super profit. But the question has given me one information that goodwill value is 90,000. So the method is super profit method. So under the super profit method, what is the goodwill formula? Goodwill is equal to your super profit into either number of years purchase or times. But here it is also given very clearly that it is on number of years purchase, the 2 years purchase. So super profit into number of years purchase. So amount given as rupees 90,000 under goodwill. Super profit I don't know. Mark it again as X, not an issue. Into number of years purchase is given as 2. So now 90,000 is equal to X into 2 will be 2X. Therefore, X is equal to 90,000 divided by 2, which will give me an amount of rupees 45,000. I'm making sense to you? So what is this 45,000? This 45,000 is nothing but my super profit. So come to the formula over here. Super profit, I got now 45,000. Correct? Okay. Now I should find out the value of my X, which is average profit. So just substitute this 41,000 to the other side. You will get the value of your average profit. So 45 plus 41 will be 86,000. Is this clear to you? Right? Or I'll just work even that. Do you want me to work it up? Okay, I'll work it up. Not an issue. Just substitute it to the other side. Okay. So that means X, if you want, it is rupees 45,000, the super profit value, plus the amount of normal profit 41,000, which will give me an amount of rupees 86,000. So apply the procedure, the steps wherever necessary by using the respective formulas, you can able to derive the exact amount. Any doubt up to this? No. Fine. Moving on to the next problem. The next problem which we are going to discuss is sum number 15. And last, sorry, not 15, it is sum number 18. I'm sorry. Okay. Now let's read the problem. What is given here? It said very clearly, Yash. Okay, there is a partner by name Yash and Karan are partners in an interior designer firm. They are fixed capitals. So here, look at it. So far, we are having only capital, but here it was mentioned in the question something like fixed capital. Remember, when fixed capital is given, you should think what we learned in the first chapter, that is basic fundamentals. The partner's capital can be maintained under two methods. One is a fixed method, the other one is a fluctuating method. If you are maintaining under the fixed method, that is fixed capital is followed, then you will be maintaining two ledger accounts, right? You will be maintaining two ledger accounts. What are those two ledger accounts? One is partners capital account. Okay, one is partners capital account. The other one is partners current account. Okay, the other one is partners current account. Remember, these two accounts are part of a capital account only. Okay, these two accounts are representing. Okay, these two account is representing. These two account is representing. Okay, partners capital balances. And one thing you should understand, the capital account Okay, capital account or the capital balance can be of two types. Okay, it can be of two types, right? One is favorable, the other one is unfavorable. Okay, so that means it can be okay favorable or it could be unfavorable. What does it mean? Favorable in the sense, okay, if it is showing a credit balance, then it is favorable. Unfavorable means it is showing a debit balance. So if it is a favorable balance, the value will be taken in plus. If it is an unfavorable balance, it will be taken as a minus. Right? So this is a basic thought process which you should understand. That's why I informed it well in advance. Okay, let's see what is mentioned here. Okay, so the question says very clearly the capital accounts which is fixed were rupees 6 lakhs and rupees 4 lakhs respectively. Okay, so the fixed capital is given to us. There were credit balances in their current account. So here it is a positive figure only. Capital account is showing a positive figure only. At the same time, even the current account is also showing a credit account. Okay, credit balance of rupees 4 lakh and rupees 5 lakhs respectively. So current account is nothing but it is also a part of your capital balances. Okay, this representing your capital balances. Okay, so don't say like what is current account? I don't know. Okay, current account is also a part of your capital account when it is maintained under what method? Under the fixed method. Okay, when it is maintained under the fixed method, even the current account is also a partner's capital account only. So we cannot say we can don't know, right? So thereby it is showing a credit balance. Good. The firm had a balance, again there is a balance of rupees 1 lakh in general reserve. So look at it. Capital information is available. Both the capital. What those both the capital? Partners capital account balance as well as the partners current account balance. So both if you club only you'll get the total capital. So the total capital balance is available for us and the reserve amount is also available for us. So that means by using the liability side approach we can easily derive the amount of capital employed. Okay. The firm did not have, this is the point to be noted, there is no liability at all. So, you are going to use liability side approach to work out the amount of capital employed and there is no liability at all. Because for liability side approach, what is the formula? The amount of capital plus the amount of reserves and you have to subtract goodwill value if any or fictitious assets and the amount of your non-trade investment. So you need not bother about the availability of liability. Even though there is no liability, we don't require the liability values when you are going to work out the problem to derive capital employed using liability side approach. That is a specialty. Okay, the liability side approach is going to be applied, but without the value of liability. Okay, so thereby the question says very clearly there is no liability in existence. Okay. They are admitting a partner by name Radhika into the firm for 1 by 11 share in the profits. The average profit, so information about average profit is given to us. For the last 5 years were rupees 5 lakhs. So thereby we know that there is an average profit which is calculated as 5 lakhs for the last 5 years. Okay, so that is very important. Average profit for 5 years, okay, is rupees 5 lakhs. Okay, what is next given in the question? Calculate the value of goodwill. So they're asking you to calculate the value of goodwill by capitalization of average profit method. So here the method is mentioned is the capitalization of average profit method. Okay, most important, normal rate of return in the business is 10%. So they are giving you what is the NRR, right? So it is not super profit method, it is capitalization of average profit. Okay, so NRR given to us as 10 percentage. What is the method that you have to apply? If you ask, the method is capitalization of average profit. Okay, it is capitalization of what profit? Average profit. Okay. Now, what is the steps to be followed? There are some four steps under this method. First, calculate your average profit. Here, what is the average profit that they are given the question? They are given the question that there is an average profit for the past 5 years amounting to how much? Amounting to rupees? Yes. Okay, amounting to rupees 5 lakhs. It is given very clearly. Okay, look at the sentence. It is given as the firm is having a balance of thing. They are admitting Radhika into partnership. Okay, the profit of the firm. Okay, the average profit of the firm for the last 5 years. So 5 years, of the average is only 5 lakhs. Many students what they does it, they are given two things, 5 lakhs and 5 years. They'll again go and do the average, which they say it's 1 lakh rupees. That leads to double counting. Okay, don't do that mistake. Here it is given very clearly, it is an average profit. Okay, for the last 5 years is rupees 5 lakhs. Okay, so that means I have the average profit available in the question itself. Okay, how much is the value? Rupees 5 lakhs. Okay, what's my second step? My second step is to calculate the capitalized value of the firm or business. Okay, capitalized value of firm or business to be derived. Okay, for this, what is the formula? The formula is quite simple. Average profit divided by NRR into 100. Average profit is 5 lakhs divided by NRR given the question was 10 percentage, so 10 by 100. Without the formulas, please don't proceed. Okay, so 5 lakhs into 10 gives me 50 lakhs rupees. Right. Now the third one is I should find out net assets. The third step is find out net assets of the firm. So for this, what method I can use, either liability side approach or asset side approach. So here in my question, I have the capital information, fixed capitals, and then the reserve information. So with this, I can go ahead only with the liability side approach. So let me first make it clear. I'm using the liability side approach. Okay, so net asset of the firm, I'm using liability side approach. So according to this approach, what is my formula? Capital plus reserves, okay, minus those items, goodwill, non-trade investment, all these things. Okay, now you substitute it. When I say capital, I should take in this case because the question says very clearly it is a fixed method. So capital balance and the current account balance both I should take into account. So according to that, if you see the question says fixed capital is 6 lakhs and 4 lakhs. First, let me write the fixed capital. Okay, balances. So rupees 6 lakhs plus rupees 4 lakh. Okay. Now see what is the current account balance is also in the question. It was given that there were credit balances in their current account. So when it's showing a credit balance, it is a favorable balance, right? As I already mentioned here. Okay, favorable balance means it is credit balance. If that is the case, you have to add back. So what is the value of the current account? It shows 4 lakh and 5 lakh. So again, add 4 lakhs and 5 lakhs. Okay, 4 lakhs and rupees 5 lakhs. Now you see whether if there is any reserve in the question. In the question it was mentioned yes there is 1 lakh rupees of reserve available. So add that 1 lakh. Okay, rupees 1 lakh. Now total value 6 lakhs plus 4 lakh is 10 lakh. 10 lakh plus 4 lakh is 14 lakh. 14 lakh plus 5 lakh is 19 plus 1 20 lakhs. Right? All together how much you're getting? 20 lakhs. Now what is this 20 lakhs? It is our net assets. Now apply in the formula. Goodwill, okay, is equal to the step 2, that is capitalized value of my firm. Okay, capitalized value of firm or business. From this you have to subtract the amount of net assets. So thereby the capitalized value of the firm or business what I got is 50 lakhs rupees. Okay, so rupees 50 lakhs minus the net asset value which I got is 20 lakhs rupees. If I do this, how much will I get? I'll be getting an amount of rupees 30 lakhs. So this 30 lakhs is only my goodwill amount. Check it up. Let's see the format, everything. Yes. So I have also got an amount of rupees 30 lakhs. Able to understand this problem? Any doubts? Any doubt anywhere? No. Okay. Now let us come to the last problem under this category. And yes, I do have another 5 6 problems for calculations which we'll be discussing in the next part of the session. So where again 5 6 problems if you work it out, thereby the entire chapter of goodwill coming to an end, and we can say that this is more than enough to get centum when problem comes from goodwill, right? Fine. The last problem in for today's class is going to be sum number 19. So what is mentioned in sum number 19? Bharat, okay, and Bhushan are partners in a retail business. Balance sheet of their capital and the current account, okay, is given to us. So now they say it's a balance sheet, okay, but you may wonder that the balance sheet is not getting agreed. Remember that this is not a complete balance sheet. This is just only an extracted balance sheet. Okay, this is not a complete balance sheet. Okay, so they have said Bharat is showing a capital account. That means their capital account is having 2 lakh rupees balance, and for Bhushan also under capital he is having 2 lakh 40 as a balance. So both are positive figures. So they are showing favorable balance or positive value. And parallelly, they also mentioned that current account as a heading, whereby for Bharat it is a positive figure of 50,000, whereas for Bhushan it is showing a negative balance, that is unfair balance. So, what is the differences in the previous problem? In the beginning of the problem itself, it is mentioned very clearly what is the method of maintaining the partner's capital account. It was a fixed method. Here, they are not mentioned the method directly, but indirectly they have just given you what are the accounts that they have, capital account and current account, by which they are trying to communicate even this problem, the partners' capital accounts have been maintained under the fixed method. Able to understand? Okay. So now they have not mentioned anything about the reserves, right? Only the capital and current account is given. They said the firm earned average profit of rupees 90,000. and they are given that if the normal rate of return is 10 percentage, find the value of goodwill. Okay, so here we should know what are the things capitalized value. Okay, they are going to work out under the capitalized value of the average profit, capitalization of average profit, right? Nothing else. Okay, so what are the information that we have if you check it up? Okay, once again, let me work out here. The information that I have with respect to this problem are: number one, I have my NRR. Okay, what is NRR given for this problem? Just check it up. The NRR, it was 10 percentage. Okay, the next is I need average profit. Check whether average profit is given in the question. Yes, average profit given as 90,000 in the question. It has been available. So 90,000. Okay, the third one, net assets. Check whether net assets is given in the question. It won't have been available. It is not available directly, but you can derive by using the liability side approach because capital information is alone available, right? So for net assets, okay, amount is not given, right? But which method can be used? You have to use liability, okay, side approach. Okay, so according to that, what are the values you have got? You have got the capital. This is the formula: capital plus reserves minus the items which are to be subtracted. Okay, so thereby goodwill, okay, minus non-trade investments and your fictitious assets. Okay, these items to be subtracted. Okay, but here I don't have anything under the reserves. I have only under capital. Okay, so according to that, what are the values I got for capital? Barrett's, I have 2 lakh and 50,000. Okay, so first let me record it. There's a positive value of 2 lakhs capital for Barrett, and how much is for Bhushan? If you see, it is 2 lakh 40. Okay, add that one, rupees 2 lakh 40, and then current account balance for Bharat it shows positive 50,000 rupees, so thereby you are going to take it as add value, whereas for Bhushan it is showing a debit balance unfavorable, so it should be subtracted. The value is given as rupees 10,000. Okay, so from this 10,000 to be subtracted. So how much you get the net amount? 2 lakhs. Okay, plus just a minute. 2 lakh plus 2 lakh 40 is 4 lakh 40. 4 lakh 40 plus 50 is 4 lakh 90. 4 lakh 90 minus 10,000 is going to be as 4 lakh 80,000 rupees. Now what is this 4 lakh 80 is all about? This is my net assets. Okay, so net assets also derived. Okay, so what is the question is all about? They're asking you to find out your average profit. So one thing which I have to find out is the capitalized value. Okay, so capitalized value I should find out. Capitalized value of firm is equal to my value of average profit. Apply the formula. Okay, average profits divided by NRR into 100. So according to that, my average profit is given as 90,000. NRR is 10 into 100. So common zeros, when you cancel it out, you will be receiving an amount of rupees 9 lakhs as your capitalized value of the firm. Now apply the goodwill formula. Okay, so goodwill is equal to your capitalized value of firm minus net assets. Please, again, I'm saying it. If you like the video, please give a thumbs up, your comment, and then share with your friends. Okay, so let others also get benefited by this video. So, goodwill is equal to the capitalized value of the firm I've got as rupees 9 lakhs minus my net asset which I have received as rupees 4 lakhs 80. So what will be the balance? That is going to be as rupees 4 lakh 20. Check whether your goodwill is 4 lakh 20 for this cases. Of course, the goodwill what we have got is rupees 4 lakh 20. So with this, we are stopping today's session. Yes, it was a lengthy video where we have done more than 5 problems, right? So problem number 19, problem number 18, then we have also worked out the problem number 15, and then we worked out the problem number 13, we worked out the problem number 12, and then we have worked out the problem number what? 7, right? We have worked out problem number 7 and then the problem 6. So 7 problems altogether we have worked out for the day, and I hope you have understood all these 7 problems. And please share the video with your friends and also give a thumbs up if you like it, and please mention in the comment section if you didn't understand any of these concepts, so that we can able to take some corrective measures, or we can just fine tune, okay, the way to approach you. And please make sure you are doing the problems by understanding the concepts and by applying the formulas and following the procedures, right? Thank you, students.